What we see that in the past there was quite a strong demand for retail, more or less any kind of retail. And why was it the case? Even during the financial crisis, retail investments did stabilize institutional portfolios. So even during the crisis, it went mostly, not all of course, but mostly it went quite well. In particular, if you compare it to offices or to other asset classes. I think that's more or less one reason. And I think also another reason is that from my point of view, that the whole asset class, the people involved there, it's a mature asset class with quite a lot of people with a really good track record and expertise, and they exactly know what they are doing.
Yes, I think at the moment the fundamentals are really very strong. We also did see a very strong improvement over the last year, especially in the consumer confidence, but also reflected in the sales in our shopping centers. So there's also more confidence from the retailers. They want to expand. There are also new retailers entering the European markets, which ask for a lot of new space in our shopping centers.
And what are rents doing at the moment?
Rents, of course, they are not increasing as much as we would like to see, but we do see an improvement, and also we see a change in the incentives giving over the last years that are now approving.
So fewer incentives.
And slowly rental increases.
Yeah, I think you see here in the Netherlands there's a clear distinction between the several product groups, whereas food and supermarket business is performing quite well. Just stable, but just also an increase in turnovers year on year, especially the do-it-yourself and home and living shops. They really, because of the crisis, really were affected quite hard. And with the Dutch residential market now picking up, and especially in the Randstad, you also see a better performance of these kind of retail units in the Netherlands. And for instance, fashion, there's also a clear distinction, where some are performing quite well, but others, are also going bankrupt. So there's huge differences.
Obviously, demand in general is high, pushed by monetary factors and strong bond yields. We see that also prices for real estate are high. I think on the economic side, of course, we have been helped in the last 2 years by strong consumer confidence. Also consumption boosted by very low inflation or even deflationist trends in combination with GDP growth and recovery. That may change, let's say, in the coming half year when inflation is going upwards, so that driver may be dynamic. And of course, also we see now that in reaction of, let's say, the changing trade dynamics with online, multi-channel, we also see that retail real estate is also transforming itself increasingly. Food and beverages is growing very strongly. Other functions are coming up. So we see that in the end, that's also looking to the functional mix, we see a more stable pattern than, let's say, the fear we have seen a couple of years ago.
And in terms of investment, where do you see the biggest opportunities at this moment?
Biggest opportunities, hard to say. Of course, it depends on the scope and, let's say, the perspective you have as an investor. I would say all markets are relatively strong and in high demand. I'm really surprised when we look to the last half year, how, let's say, peripheral markets, smaller markets, yields are now also catching up, getting stronger rapidly. Of course, we have the discussion on secondary assets, how far can you go with secondary? But I think with value add and fixed projects, there is still, good opportunities.